Important show today if you're a silver bull, a silver investor, or a silver stocks investor. We're going to look at silver. We're going to look at the levels. We're going to look at the oil price and the dollar, the two most important things right now that move the silver price. How are they doing? And then we're going to look at the silver miners. And that is a chart you need to know. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. If you're new to the channel, hit the subscribe button so you don't miss any of the videos. And while I have you here, announcement, we're going to have a special video on Saturday talking about the commodity mining sector and AI, a topic that nobody's talking about right now, that I think you need to know about, because this video, I think, is going to really surprise you. But today, we're going to talk about silver. Let's start with silver. Last week, about a week and a half ago, beginning of last week, I told you I think the silver price is going to go lower, and that's exactly what happened. Today's small bounce of this support zone that we figured out and pointed out, okay, that's cute, but it doesn't change trend at all. And the trend is clearly looking down. We got a new trend line that we now need to draw in. It's going to be this one right here. All right, we have the breakdown. Then we had the rally. And now from there, we made a lower high. So this is the new trend line. This also clearly shows us that the upside potential of silver is really limited, because not only do you have the downtrend here, you also have the 50-day moving up. So we're really talking about $6, not even on the upside. That's not even 10%. That's not a trade that I would put on. Now, where do I think that silver will ultimately go? I told you first stop right here, 200-day moving average, which we need to test to kind of become clean in the charts before the next rally in silver. We also have a Fibonacci retracement. Those are the red lines that you see in here. But if we break below the 200, I can see us having a flush sell-off like we did here or here. Obviously, this fun times right here, down to this uptrend, to this major support zone that goes all the way back to the Trump tariff chaos starting in April of last year. But I think the 200 is what we need to watch out for, and that needs to be one of the central parts of our investment thesis if we want to get long in silver and the silver miners. What does that mean? That means if I'm interested in silver, this is an area where I want to start accumulating part of my position. And then I want to hold money back just in case I'm going to get a flush sell-off and get a short-term great buying opportunity. But you define the main trend line that you think is most important, and that's where you start to get to work. To me, that's the 200-day moving average. Again, I would say 35%, 45%, no, 45, whatever. Yeah, okay. Let's do the nerdy German number stuff, right? Like, it's 37.698% that we're going to go lower below the 200 and test the upturn. But that also means that, this is going to be a tough one. 52.137.5, whatever percent that the 200 is going to hold. So I want to get in personally at the 200 as of this moment. Now, we're always going to reassess again. And as I told you in the videos before, and if you missed these videos when I warned you early about the silver price going down, hit the subscribe button. It really helps you out. It helps us out. Everybody's happy, and we're not even hippies. What a great life. So silver tends to have wild intraday swings. So we're probably going to get wild intraday swings once we get below this support zone right here, which, by the way, was support right here, right? I'm not going to say it's super significant, but we get below, we're going to get another leg lower. And we know why that is. We know that is because of the trend following investors who now are either not buying anymore or are actually actively on the short side. And that's one of the issues with silver and the silver stocks, and I think they're going to go lower. We have zero institutional interest in silver. We have zero interest in the broader retail market, in the silver miners or the gold miners right now. They are all obviously laser focused and are like, they're like the cat. Ooh, new shiny object over here. Let's go over here. Chip stocks. Ooh la la. Right? And then once they stop working, it'll be like, oh, silver miners over here. They don't look at the fundamentals. They don't look at the long-term factors that are going to support the silver rally, the gold rally, and therefore the mining stocks. They're always going to buy too late. They're always going to sell too early. But let's not make their problems our problems. Now, what are the problems for the silver price? Oh, that was quite a trend. What do you call that? Translation? No. Transfer? Doesn't matter. Jumping to the next topic. How about that? That's not so great, but that's what we're going to roll with. Dollar. People are not paying enough attention to the dollar. Here's the Dixie. I told you, decision time, downtrend, 200-day, 50-day, and resistance zone, which is the weakest of all of them, the least important, the blue one. We already establishing ourselves above the 200. That is very important. Yesterday, we broke the downtrend. Very important. Nobody's talking about this. We are correcting right now. So now things are going to get really interesting with the dollar. Are we staying above the 200 in this correction? And are we staying above the downtrend? Then we can expect an attack on the 50-day and this resistance zone right here. That should be yellow, by the way, by now. So here we go. There it is. We break this resistance zone and above the 50. I told you before, we're going to gap fill real quick and we're going to go parity really quick. And from what I can see and hear in the markets are not positioned for this at all. So that means the rally in the dollar would be vicious. And with this neutral to negative sentiment, short term, for gold and silver and the miners, that'll push down gold and silver and it'll push down the miners. Now, let's talk about oil. The other big short-term factor. What do you want me to do? On Monday, I talked about oil. I said, hey, it's breaking out energy stocks. Maybe look at those European energy stocks. I've been saying all throughout the corrections, don't sell your energy stocks. Hold on to your energy stocks. Now you look like a genius. Not necessary to thank me at all. Just enjoy the money you made with the energy stocks. We broke out. I told you we break out above this yellow resistance zone, which is clearly the zone that we defined really well. We're going to get a mad rush into oil. That's exactly what happened. You saw it moving up significantly. And now, where do we stand? Well, we basically have a resistance zone right here. It goes about here. Okay? So, and you can see we ran right into it and we were not able to break through it. That's fair. But overall, this is constructive bull flag consolidation that we're seeing here in oil. And I've been hearing people wanting to short oil. I am telling you, Do not short oil here. And this is an important trading lesson. This is actually going to be one of the significant lessons from this video. People only pay attention to the technicals and the charts when trading and make decisions based out of this, and they completely ignore the risk factors. And that's why they get burned hard. And the reason why I'm saying do not short oil is not the technical setup, which, by the way, doesn't look that great to short it, but different story. You can have different interpretations of the charts, and maybe I'm wrong and I'm an idiot, wouldn't be the first time, and oil goes down. I think oil has a lot of momentum behind it. That is the easy trade in the market right now. You look at the other segments. We just talked about the dollar. That's not clear yet where it's going to go. We know the precious metals have lost the momentum short term. We saw yesterday with Google and Meta reporting earnings that things are going to get really tricky in the tech sector. That's not an easy trade at all. Semis long was an easy trade, and software rebound was an easy trade, but those have run up by now, and now things are getting a little dicey. What is the easy trade in the market? It's oil long, it's energy stocks long. So we have an uncalculated rally risk in the oil market that you cannot calculate. One message overnight while you're sleeping, and hopefully you have a great pillow that you're sleeping comfortable on. We know how the people are really picky about their pillows. And at that time, some news drops that Iran has, attacked some tankers, whatever. The oil price is going to jump. Once it gets through that new resistance zone that I just drew in, we're going to 120, and we're probably not stopping there. We're probably going to go to 130 easy. You're going to get burned, flamethrower to the face with your oil short position when that happens. So calculate the risk. Or in another way, just avoid the risk. I try to avoid uncalculatable risk factors. I, for example, don't like to trade stocks where earnings are coming up in less than a week, because that's an uncalculatable risk for me. Why would I put that in my book if I have so many other trading options? Or in this case, I'm just going to sit out the oil trade. I'm just going to sit it out. I'm going to lean back. I'm going to drink my pineapple juice, and I want to watch a Harry Potter movie. So maybe the oil price goes down. Okay, so I missed one short trade. How far down can it possibly go? What do we think here? Well, realistically, probably going to go back to this zone right now, which is now going to be support. So that's like a 7% downward move at most, where people probably would cover their shorts. So I get a 7% profit for an uncalculated risk to the upside that I get burned flamethrower to the face. That's not worth it for me. And if you have ever been in these type of trades and you got burned, you know if this hits and oil goes to 130, you're going to sit there and you're going to say, lucky you that you didn't take this trade. But oil looks constructive, and if we know ultra short term it can go down, but like even short term to mid-term, it looks really good. That means inflation worries and risk is rising, which is long-term good for gold and silver, but short-term not great. So we have these factors that work against gold and silver right now. Clearly, there are no signals here that give us any indication that this could turn into support for gold and silver. So now let's take a look at silver miners. We got to speed up here because we're already late in time. I like to keep these videos with around 15 minutes, 20 minutes max, because you guys got better things to do than look at my ugly schnitzel face in your life. At least I hope so. So let's talk silver miners. This is the Global X Silver Miners. I left in here these arrows, which I drew in this area right here. I I think like beginning of April, we're still way in the uptrend. I told you we're going to move up, we're going to have a correction all the way down to this uptrend, and then we're going to rally. Now, I left these in to show you, and I'm going to move them a little bit now, and you can go back and watch the videos if you want. As you can see, this is exactly how things are playing out. We are very close to the uptrend. It's the uptrend that has been in place since the tariff chaos of last April, so that's a significant uptrend. But I'm starting to think that we're going to go a little lower in the silver miners. I think now the target zone has to be the 200, which is the golden line that you see below. Again, first off, that would be really constructive to clear out the charts. Second off, you look at the RSI, we're not extremely oversold yet, like we were at the last big bottom we made right here. As you can see, well, sorry about that. I don't know what TradingView is doing with this. Here we go. As you can see, here's the RSI. We were oversold, more oversold here. So that basically leaves us with another about 10% downside. And we look at some of the big silver names, and their charts don't look great. Kerr broke below the 200 yesterday. We'll see if it can regain it or it's going to fall below it. Not great. First Majestic, there's a lot of air in this balloon until it comes down to 200. Now this is a great support zone right here. First Majestic, really interesting as a trading opportunity too. And I love this idea of undercutting these lows to trigger the stops. You know all the retail stops are sitting right here at around 1775-ish. Undercutting them, selling them off, and then you hit this triple support zone. What do we have here? Hekla. There's some air left until we touch the 200. There's a lot of air left in Pan American Silver. So you get the idea. The heavyweights, some of them don't look great, or they have a lot of room to go down. And that's why I think that actually we're probably going to get a small rebound at the upturn for the silver miners, especially if silver is gaining short-term rebound strength. But I think we're going to go a little lower here in the silver miners. So I'm waiting. I'm having my watch list ready. There's no reason for us to rush into the mining stocks right now. The sentiment is negative to disinterested, but we're not in the oversold areas yet, which negative is perfect. Disinterested is fine, but negative would be perfect. If that's the sentiment where we want to buy. We don't want to buy when it's euphoric like it was in January. So patience, young Jedis. Patience. Our time will come. It might come a little lower than I anticipated so far, that a lot of other people are anticipating. But that's even better for us because that gives us better entry points. That's it for today. Have a great day. Hey, it's Thursday. It's the little Friday. Have a great drink. Have a great meal. Enjoy life a little bit. And we'll talk tomorrow. Bye-bye.